Welcome to the FedLife podcast with Dan Sipe from Serving Those Who Serve. In this podcast, Dan draws from years of financial experience to help federal employees overcome challenges that every Fed can relate to. Join us for this journey as we reach, teach, and serve to help you make the right financial decisions. Now, on to the show.
Hello and welcome to this episode of the FedLife podcast. Once again, I am your host, Dan Sipe. As you already know, additionally, I am the branch manager here at Serving Those Who Serve and Lee Sipe & Associates. I will begin, as I always do, by saying thank you. Thank you for taking time to listen, but also thank you for your service. To me, to Ed, to all the people in the United States, to the government, to the country. You do not hear that enough. You'll always hear it here. Ed Zurndorfer is back with us once again. Yes, the guru is always here to help us with our ongoing mission to reach, teach, and serve you, career civilian Fed. At the outset, I need to say that the opinions of our guest Ed Zurndorfer, although they are frequently awesome, are not the opinions of Raymond James or Serving Those Who Serve. This podcast is presented for information only and is not intended to be taken as advice. All listeners should consult their personal advisors before taking any action. And if you don't have a personal advisor, hit us up at Serving Those Who Serve. That's stwserve.com, and we'll help you any way we can. As is our wont, we are following Ed's FedZone articles. One more way that we have to reach and teach. But I will remind you again, be sure to subscribe if you've not already done so to our weekly serving. Every week we deliver the best of that, but also our other authors. Jen Meyer, Wes Battle, Benefits Ben, all coming straight to your inbox. So don't miss out. See the subscription information on the YouTube page for the podcast, or head over to stwserve.com. Little pop-up window will come up. Throw your email in there. We'll make sure you don't miss any of our content. This particular one is really important that we're going to be covering. We're still on the topic of taxes, but we're getting specific to Roth conversions, and specifically Roth conversions coming directly from traditional TSP to convert and go into a Roth IRA account. So, and start us off with a flyover on the off chance that somebody's tuning into this that doesn't fully know what a Roth conversion is. What's a Roth conversion, and why might a Fed do one?
Okay. We are talking about transferring traditional TSP to a Roth IRA. And one of the reasons we're doing this now, it's after tax season. I have an accounting and tax practice, Dan, as you know.
Yep.
And I have several clients who are either federal retirees, federal employees, or federal retirees.
Sure.
And after tax season concluded, I like to look at some of the issues that came up. I call it damage control.
Okay.
And one of the issues that came up during tax season, I have a client who, by the way, is a very sophisticated client. She's a federal retiree. She's very much up on all benefits and taxes. She keeps me on my toes. And one of the things that she's doing now, she's trying to transfer all of her traditional TSP account to a Roth IRA. And it has tax consequences. Now, in answer to the question, there are two ways one can, to your question, Dan, there are two ways one can get a Roth IRA. One is to contribute to one. You make contributions like you make a contribution to any type of IRA, a traditional IRA. You can make a contribution to a Roth IRA, and you're limited. Your limit is how much you can contribute each year to a Roth IRA. One other restriction regarding contributing to a Roth IRA, and that is if your income is too high during the year, and we're talking about your adjusted gross income, Dan, one is not allowed to contribute to a Roth IRA. It's not allowed. You're not allowed to contribute to a Roth IRA if your AGI is over a certain amount, depending on your filing status. All right. The other way one can get a Roth IRA is either to convert a traditional IRA to a Roth IRA. It's called conversion, in which you have to pay the tax on the amount that you're converting, and there's no limit as far as how much you can convert. And the other way one can get a Roth IRA is to convert a qualified retirement plan, like a 401k plan, like the traditional TSP, to a Roth IRA. Now, when I say convert, what that really means is you're really not, in the sense, classic sense, converting. When I say converting, when I say going from the traditional TSP to a Roth IRA, because what you're doing is you are requesting that the TSP transfer a portion of your traditional TSP account to a Roth IRA account. That is a fully taxable transaction. Why? Because the traditional TSP, Dan, everything inside the traditional TSP has not been taxed. That includes the contributions that an employee made, as well as all the accrued earnings. And when you make this decision, I want to transfer my traditional TSP account to a Roth IRA, the Roth IRA, you're going to put that money in by law. With a Roth IRA, everything coming out of the Roth IRA, when it's withdrawn after age 59 and a half, one has put money in there all these years, accrued earnings, the money will come out tax-free.
Makes sense.
All right. And that's why everybody loves Roth IRAs, because they get the tax-free treatment when they pull the money out in retirement. All right. So it is a taxable transaction, just like when you convert a traditional IRA to a Roth IRA, that is fully taxable. When you contribute, when you transfer not any portion of your traditional TSP to a Roth IRA, it is a fully taxable transaction. And there is no limit as far as how much one can transfer from their traditional TSP to a Roth IRA in any year. There's no limit.
Gotcha.
Now, my client has been transferring traditional TSP to Roth IRAs for a couple of years now. And the reason she's doing it over a period of time is, understand that if you transfer too much in any 1 year of your traditional TSP to a Roth IRA, it could push you into a higher tax bracket. You want to make sure that in any year that you transfer your traditional TSP to a Roth IRA, and you can do this over many years. There's no time limitation here. You can do this. You can do it over a period of time, starting when you're 59 and a half. But you got to pay tax. And if it turns out that you're transferring so much in any 1 year, it could push you into a higher marginal tax bracket. You were in 22% federal marginal tax bracket. You push so much into the TSP, into a Roth IRA, you transferred so much, now you're into a 35% tax bracket. You're going to pay 35% tax on the amount that you're transferring. That's not a good tax move.
Gotcha.
All right. So my client, being very sophisticated, she decided, okay, I want to transfer $50,000 this year. This is in 2022, because that she worked out the numbers. This would keep her in a 22% federal tax bracket. She's in a state that has a low income tax, 5%. It kept her within the 5% tax in the state. Fine. So she did that. She gives me her tax documents for 2022, including a 1099-R from the TSP. 1099-R reports transactions that occurred with your TSP account. That would include if you made a withdrawal, took money out, or if you did a rollover, that is, you transferred your TSP to an IRA or to another qualified retirement plan. Everything is reported on a 1099-R. So,
gotcha.
So, also my client made, in addition to this $50,000 transfer of her traditional TSP to a Roth IRA, she also she had reached her required beginning date. That is, she reached age 72 last year, in which she had to take out what's called an RMD, requirement distribution, from her TSP account. So that was a separate transaction. She took out the amount from her traditional TSP to meet the requirement of taking a TSP RMD during 2022. Two separate transactions.
Gotcha. Now, Ed, in your article, you kind of kick things off with guidance for folks to download tax rules about TSP payments from the TSP website. And you within that, you describe the action of the direct roller to give us a great chart for keeping that straight. So folks, I've said this many, many times, be sure to get Ed's article from FedZone, that's fed-zone.com, because his examples are fantastic. But as you've been sort of touching around here, within that guidance, you indicate that the IRS and the TSP differ on what constitutes a direct rollover, and that's big in this case, correct?
That is correct. I want to just give us some general background information about how the TSP does rollovers. When a TSP participant requests, let's say, a portion of their traditional TSP to be transferred to a traditional IRA,
mm-hmm.
Then what the TSP is going to do is they're going to write a check to the IRA custodian, the name of the IRA custodian, for benefit of the TSP participant. And that check is sent certified mail to the IRA custodian. This is what's called a direct rollover. Now,
Gotcha.
Why, as opposed to a rollover? Why is this important that it's a direct rollover as opposed to just a regular rollover? With a rollover, Dan, the retirement plan administrator writes a check out in the name of the retirement plan owner. So in this case here, if the TSP did a rollover, a traditional TSP participant wants to do a rollover of $100,000 of their traditional TSP to the XYZ IRA. And what the TSP participant says, listen, I would like you, TSP, to send me the check. I'll put it in there. I will put it into the IRA account. That's a rollover. Now, once that check is received by the TSP participant, they have 60 days. That's 60 days to get that money into that IRA. Sounds easy, right, Dan?
Yeah, but
60 days. 60 days.
You're going to tell me it's not as easy as we think.
60 days. That's 2 months. That's reasonable, isn't it?
Sounds reasonable, Ed.
Yeah. Only one problem. Whenever the TSP writes a check out to the TSP participant, by law, they have to withhold 20% federal income tax withholding. So if the TSP participant was saying, I'd like to roll over $100,000 in my traditional TSP account, then they're going to get a check for $80,000. And then they have 60 days to put how much money into the IRA account. How much has to go?
The full amount of the rollover.
Which is how much? 100,000.
Yep.
They only got 80.
Gotcha.
They got to make up to 20,000. within
Gotcha.
60 days. That's not loose change. And if
Makes sense.
they don't put the full 100,000 in there, it's a failed rollover.
Ooh, that sounds bad.
There could be possible penalties. But this is why the TSP has a policy, and this is a good policy. I'm going to praise the TSP. They never do rollovers. They never do rollovers. They always do direct rollovers, in which they write the check out to the custodian for the benefit of the TSP participant. The TSP participant never sees the money. It's sent certified mail. So no problem. It is a successful rollover. And then it hits the IRA account, traditional IRA, no problem, no withholding. And the TSP participant will only pay tax when the TSP participant withdraws money from the traditional IRA, no problem. Okay, so a rollover is in fact, if it's a direct rollover, is in fact a non-taxable transaction. TSP normally withholds federal income tax when they take out 20%, when they take out when someone's requesting a distribution, or like I said, a rollover. But you can't do a rollover with the TSP. So if a TSP participant is requesting from their traditional TSP account a direct rollover to the IRA, to an IRA, or they could ask for a direct rollover to a qualified retirement plan, like a 401k plan. Here, the TSP participant retired from federal service, they got a job in private industry, and they'd like to put their a portion of their traditional TSP account into that company's qualified retirement plan, a 401k plan. That would also be a direct rollover. There's going to be no federal income tax withholding because it's a direct rollover. Zero.
Gotcha.
Okay. So what I'm saying here, Dan, is that when it comes to these rollovers, my examples here, we're going from apples to apples.
Okay.
All right. Now, the same thing is true also with the Roth TSP. You can request a direct rollover from your Roth TSP account to a Roth IRA. Once again, there's certainly going to be no withholding, no federal income tax withholding. A TSP participant can, a Roth TSP participant can request a rollover of their Roth TSP account to a Roth 401k plan, to a Roth 403b plan.
Sure.
Once again, this is apples to apples. Now, IRS and the TSP have a difference here. If you look in this publication that the TSP puts out, and this is what we're talking about a few moments ago, TSP has a publication called Tax Rules About TSP Payments. Tax Rules About TSP Payments. And the TSP, in that publication, the TSP explains what constitutes a traditional TSP direct rollover. Here's what the TSP puts in that publication. TSP states in that publication, eligible rollover distribution, that's from the traditional TSP, may be directly rolled over to a traditional IRA, like the example I was sharing a few moments ago, to an eligible qualified retirement plan, example like a 401k plan, which I just mentioned as an example, one of my examples a few moments ago. And listen to this, Dan. And to a Roth IRA. The TSP states that one can make an eligible rollover distribution, can request a direct rollover distribution to a Roth IRA. If you go to the IRS's website, they also have a definition of what a direct rollover is. A direct rollover of a qualified plan distribution, and this would include 401k plans, a traditional 401k, would also include traditional TSP, would go to a qualified retirement plan, like a 401k plan, 403b plan, or to a traditional IRA. What do they leave out? The Roth IRA.
Sure.
IRS says when you do a rollover, a direct rollover of your traditional TSP to a Roth IRA, that is not a rollover. It is not.
Sure.
And I have a table that summarizes all this, summarizes this. And that's what I just mentioned. The fact of the matter is that we have a little problem here. There's a problem here.
I see it.
And let me share my experience again with my client. And just so individuals know, I wrote this information, all this information has been written up in the most recent Fed Zone column. It's coming out this week. This is the last week of April. It'll be up there. And everything we're discussing here is shared there. The example I'm using is a little bit different than what my client, because I have to protect the identity of my client.
Oh, 100%. Yeah, you talk about the hypothetical Suzanne.
And the example is Suzanne.
Yeah.
And let me go through that, what the situation is, what the example is. So we have someone whose name is Suzanne. She is a annuitant, 72 years old, who's in the process of transferring her traditional TSP to a Roth IRA. She has this Roth IRA held at the XYZ brokerage firm. She's been doing these transfers of a traditional TSP to Roth IRAs for years, for at least, I think, 3 to 5 years. Now, during 2022, Suzanne became age 72, and therefore she had to take her first TSP RMD, which she did. That came from she only has the traditional TSP. If she had the Roth TSP, she'd have to include that balance too, but but she doesn't have the Roth TSP. She only has the traditional TSP. So the TSP calculated her first Roth TSP RMD, and they came up with an amount. It came out to be $8,600. That was her 2022 TSP RMD, which she took out during 2022. And also, Suzanne requested that the TSP transfer $50,000 of her traditional TSP to a Roth IRA that she had set up at the XYZ brokerage firm. In January 2023, Suzanne gets 2 Form 1099-Rs from the TSP. Again, a Form 1099-R reports the distribution, the rollover from a qualified retirement plan, in this case, the TSP. Also, the IRAs use Form 1099-R to report the distributions and rollovers from IRAs. All right. So I reproduced a typical 1099-R in the column. Let me just give you some of the basics information here. For the first distribution showing the $8,600 RMD, Dan, the gross distribution in box 1 was $8,600. Box 2A says taxable distribution, $8,600. It's fully taxable. It's coming from the traditional TSP. It's a distribution. Box 7 of a Form 1099-R, it's entitled distribution code, and the IRS has various types of, there are different types of distributions, and the IRS has codes for that. When it comes to a normal distribution, that is, the person's over 59 and a half, they're taking money out of their retirement plan, it is a code 7.
Gotcha.
Which means that the entire distribution, 8,600, is fully taxable, no problem. Suzanne's second 1099-R from the TSP, let me just get it right here, showed a gross distribution in box 1 of $50,000. Box 2A, taxable distribution, says it's $50,000. Now remember, Dan, we are transferring, Suzanne is transferring $50,000 from her traditional TSP, which has not been taxed.
Sure.
And that ever has been taxed. And now she wants to put it into the Roth IRA, which by law, when you take money out of the Roth IRA, it's not going to be taxable.
Sure.
So we have to pay tax along the way here. We got to pay tax on that distribution. All right. So let's go to code 7, distribution code. Let's go to box 7, Dan, the distribution code on Suzanne's 1099-R. You know what it said? It said G, rollover.
That's going to be a problem.
What type of problem, Dan, do you think?
So it might seem like this is a really nice break for Suzanne because TSP is reporting it as though there's no taxable event here.
Right.
And there is, in fact, a taxable event, right?
It is a fully taxable event.
Okay.
So when I inputted all the information for Suzanne's taxes, because I'm preparing her taxes, I incorporated these two pieces of information, the 1099, these two 1099Rs. So here on Form 1040, and I reproduced, I reproduced a 1040 so people who read the article will see what I'm talking about. On line 5A of Form 1040, it says pension and distributions. 5A means gross distribution.
Mm-hmm.
Line 5B says taxable distribution. Now, what was the gross distribution here for Suzanne for the TSP? We add 8,600,
right,
plus 50,000. We come up with 58,600.
Yep.
And for the taxable distribution, according to the two 1099Rs, 8,600, that's in box 2A, plus 50,000 in box 2A for a total of 58,600. So what shows up on line 5B? 8,600.
Mm-hmm.
Because when my tax professional software caught that G, means rollover, the distribution is not taxable according to the code G. It's a rollover.
Gotcha.
And I told Suzanne that we got a problem here. The TSP has coded box number 7. G, it's wrong. It should be a code 7 because it's fully taxable.
Right.
Well, Suzanne was very upset about this.
Sure.
And as I say, Suzanne is a very sophisticated person when it comes to taxes and finances. She calls the TSP. She says, I want to talk to someone about this because my accountant told me that I'm not paying tax on the full $50,000. And they said, well, look at the publication. Look at the publication. It says that a rollover to a Roth IRA from the traditional TSP is allowed. He says, I know that, but it's a taxable event, and you reported that. But the way you coded it, there's no way the software is going to show that the event is taxable because you coded it as rollover. You got to code it 7. And they're going back and forth. And the person from the TSP said, I'm not, I don't know what to tell you here. She said, you don't have to tell me anything. You got to change it.
Sure.
He said, well, I'll have to get back to you. Well, it took him a week before he got back. We're still looking into it. In the meantime, I told Suzanne, we have to file for an extension. There's no way I can file this tax return. You know, it's very interesting that when Suzanne was talking to this person from the TSP, she was almost crying. And why was she crying? She told the person, all I want to do is to pay my taxes. That's all I want to do. And you're making it very difficult for me. Isn't it interesting? A lot of people, I don't want to pay taxes. I'm going to do everything possible. Suzanne, being the upright person, the honest person, she says, all I want to do is to pay my fair share taxes. And if you don't change that code to a 7, I'm not going to be able to.
Sure.
I said to Suzanne, you're absolutely correct. I'm with you. That's why I'm not filing a tax return. And there's another issue here, that if this goes by, if you end up not paying taxes on this, if this were to happen, your IRA custodian is going to have a problem when they issue Form 5498. 5498. Form 5498 reports an individual's, what the value of an individual's traditional IRA is, Roth IRAs, have there been any contributions? Well, in reality, the firm that she put this IRA custodian she's sending us to, Roth IRA custodian, cannot legally call this a Roth conversion. It's not, because the money coming over was not taxed.
Wow.
So we got to get this thing straightened out. Now it's now we filed for the extension, but this has been going on now for 3 weeks.
Ed, have you been able to zero in at this point that this isn't necessarily something that could be a one-off? This could happen over and over if feds choose to attempt to convert funds directly from TSP into a Roth IRA.
Yes, Dan. And I'm advising people right now, anybody who has not done these traditional, if you are thinking about transferring a part of your traditional TSP to a Roth IRA, hold off. So this is straighten out. And now, if you insist, I really want to get my traditional TSP over to a Roth IRA, here's my suggestion. Then do a direct rollover of your traditional TSP to a traditional IRA. That is a code G in box 7. Sure. And then once it hits the IRA, you request a traditional IRA conversion with your IRA custodian. That'll solve the problem.
Gotcha. And, I'm going to ask a dumb question here, Ed. So there's no way to kind of self-report and still go ahead and file. Say, no. Hey, I know this says this, but it's wrong, and I actually owe this.
No, can't do that.
Oh, wow.
There's no way. There's no way. Because what's going to happen is, let's say you paying using estimated tax payments.
Mm-hmm.
Estimated tax payments. Like in Suzanne's case. Okay, I'll just on the 50,000. Suppose she owes she's in a 22% tax bracket, owes $11,000, 22% of 50,000, and she just writes a check out, or she tells the IRS, take out $11,000 from my account and call it federal income tax. You're not doing this out of the goodness of your heart because you think of a tax liability. Well, if the IRS sees no tax liability, they're just going to refund it next year.
Gotcha. So they'll treat it as a mistake and refund to her.
You overpaid. They'll return the money to you.
Wow.
No, Dan.
That would drive, from the way you've described Suzanne, that would drive her nuts.
Yeah, Dan, there's only one solution here. The TSP has to correct its mistake. It's not the end of the world, TSP. Everybody makes mistakes. Please do it. Because you're going to cause a lot of problems for individuals.
So this is something, and I just want to clarify here, in your estimation, Ed, this is like a chassis level thing that they need to correct versus somebody just hit the wrong key.
Exactly.
Okay.
Yeah.
Wow. This, all the stuff you put out there is amazing, but this one really is huge, and yeah, maybe not everybody on the block, does Roth conversions. A lot of people do them, and it would certainly make sense that you should be able to just go directly from TSP. But I can see where there's a real problem with essentially two government organizations having a difference of opinion of how this thing should be coded and set. So yeah, what are your final thoughts on this one, Ed?
My final thoughts is for the federal employees and who are listening, federal retirees thinking about transferring any of their traditional TSP to a Roth IRA. Please, number one, check out this article, check out this column. Very important. That's number one. Number two is even when things are straightened out, hopefully, when TSP straightens this problem out, and you're thinking about doing a transfer of a portion of your traditional TSP Roth IRA, please work with a qualified advisor, tax advisor, someone who's up when it comes to totally aware of the tax consequences of conversions and transfers, things like that. Please, this may be above your level to fully understand. It's very tricky, and believe me, there are many good qualified people out there. And this is so important that this is something you don't try on your own. You need a background. Just some other advice regarding that. If you're going to do these transfers, you make sure you have enough liquid funds, liquidity to pay the federal and state taxes due. We haven't talked about the state taxes regarding transfers. They also these transfers of traditional TSP to Roth IRAs are fully taxable. Are going to be state taxable, and the TSP doesn't report that as well. So you have to make sure that you understand how much you're going to have to pay in state income taxes. That's why you need to work with a qualified tax advisor.
Gotcha. That makes sense. Ed, you never cease to amaze me with some of the stuff that you're able to run to ground for feds. I don't know how you do it. I'm glad you do it with us. Folks, today's a little bit of a special recording and a little bit bittersweet because we're saying farewell to someone who is going to be making a pretty significant, pretty admirable life change. We use an outside group for recording and producing our podcasts. And you would never know this because just like every great professional, if he's doing his job great, you don't know he's there. Eric Johnson has been with us throughout, and we're close to 100 consecutive episodes here. We go back 4 years, and Eric's been with us every step of the way. We want to say thank you and good luck and Godspeed to him, and especially Godspeed because Eric and his wife are going to be returning to Boys Town, where they will be teachers and house parents for young folks in need. And in this day and age, I can't think of anything that is more admirable and laudable than that. We're certainly going to miss Eric. We have a lot of fun behind the scenes that you don't get to hear. But if you're listening to this, hold a good thought for Eric and his family. We're going to miss him, but our loss is very much Boys Town's gain. So just wanted to pop that in there. Ed, I will close as I always do by saying thank you for being the guy. Ed is him when it comes to this stuff as far as, hey, Dan, this popped up. I think let's write an article. Let's do it. And then, I turn it into a podcast. So, he really is kind of the wellspring on this. And I think the one thing that we're especially happy about, we're both practicing professionals. I don't hit this very much. We're a financial advisory firm. So yeah, we always love to get new clients. But what we do with this outreach is make sure that we are sharing the things we learn from working with feds every single day. And I think that gives us a little bit of a unique perspective from Serving Those Who Serve and from Ed Zurndorfer, because, and there are some great journalists out there that are writing about Fed stuff, and by all means you should consume that. But we really think our special approach to it is that we're boots on the ground. We are working with feds every single day, and that's why this stuff comes up. So again, Ed, thank you for sharing this with the folks who aren't your clients. So that too is admirable and laudable.
Our pleasure.
Yep. Folks, that's a wrap. We will see you all at the next podcast. We are Serving Those Who Serve. Be sure to subscribe to the podcast on our YouTube channel and Spotify. Share it with friends. Share it with your enemies. Okay, they might become friends after they do that. Check us out on Twitter, LinkedIn. Don't forget our live webinars every single week. The guru will come to you. Go over to swserve.com. Up at the top right-hand corner, you will see that blue button. Hit it, turns red, takes you right to the menu. And Ed will transcend the bounds of space and time to be able to come to you where you are, reach you where you are, teach you where you are, serve you where you are. Sign up for one, sign up for all. Share those with your friends as well. And don't forget to read Ed every week in the Fed Zone. That's fed-zone.com. And don't forget to sign up for the weekly servings, so we'll pop this stuff out to you in case you didn't have a chance to come that week and read. So closing out for Eric, bon voyage, my friend. For Ed, the crew at Serving Those Who Serve, and me, Dan Sipe, good luck, Godspeed, and above all, remember, it's your Fed life. Make it a great one, because you deserve it. Stay well, everybody. We are out.
Thank you for listening to the FedLife Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Serving Those Who Serve or Raymond James. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities offered through Raymond James Financial Services Incorporated, member FINRA SIPC. Investment advisory services offered through Raymond James Financial Services Advisors Incorporated. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services.
Raymond James is not affiliated and does not endorse the opinions or services of any of the quoted professionals or their respective firms. Any opinions are those of Dan Sipe and not necessarily those of RJFS or Raymond James. This case study is for illustrative purposes only. Individual cases will vary. Raymond James is not affiliated with and does not endorse the opinions or services of the quoted professionals or their respective organizations.
Neither Raymond James Financial Services nor any Raymond James financial advisor renders advice on tax issues. These matters should be discussed with the appropriate professional. Investing involves risk, and you may incur a profit or loss regardless of strategy selected, including diversification and asset allocation.